Oh, hello everyone, it's Susie, Crypto Granny here. The date's the 27th of the 9th, 2021, and the time in Netherlands time, Amsterdam time, is 15:41 p.m. So what I'm going to do today is I'm going to start with the fiat markets, what's coming out economically, and what sort of risk events there are this week in terms of fiat markets, the economy, and that sort of thing. Then I will talk about crypto markets rather than starting with crypto markets first. I do see there's a lot of risks in this market at the moment. We hold no coins, myself and my clients at this stage. Volatility measures are still extreme. We do see people are selling in terms of funding rates. The institutional investors are, I believe, long and wrong. And this market is setting up for a breakout, and it's still many prices are still trading under the 200-day moving average on a 4-hour, which is mainly what I look at. So let's talk about what's happening this week and what could tip this market over into the negative, particularly. The first thing is the government. September the 30th is the deadline for, let me just turn this off. Sorry, I've got my squawk box on and that's likely to go off. The government's deadline for the US vote on the raising of the debt ceiling for the US, which currently is at 28.4 trillion, which is massive. They have to vote to increase the debt ceiling, which is effectively their credit card, okay? And if they don't increase the debt ceiling, they can't issue any more bonds into the market or any more treasury notes into the market to fund their deficits and their budget. That's pretty much the story. Now, this debt ceiling comes up every 2 years or so. It is a risk to markets, a big risk, because if they don't get this vote through Congress, the Senate, essentially the government can shut down by the end of the month. And that means they can't pay people on the federal government payroll, okay? And this could be, obviously politicians, it could be people, they're sitting in, all in the government departments, it could be nurses, it could be policemen, this sort of thing. So this is a big risk to markets, okay? Also, there's an infrastructure vote that has to go through this week as well, and that's about 1.1 trillion or so. You've got to wonder where all this money goes, seriously. This is a bipartisan bill, infrastructure deal, which is also going to be voted on September the 30th in the US Congress as well. So they are two key risk metrics that can, not be great for this market if there's any delay on those, for sure. Now, we know the Evergrande thing, which is a property company in China, the second largest property company in China. They missed their $83.5 million coupon payment last Thursday. There are more coupon payments to be made on the 29th of September, another $45 million, and then there's some very large coupon payments to be made in January 2022, something like $273 million. Now, apparently they've been paying their local debtors in China, and this is pretty much what the Chinese government told them to do. Pay them down. Obviously, they're madly trying to sell property at discounted rates. But if you know anything about China, there is a lot of real estate in China, and there's towns in China and cities where there's all this real estate that's been built, and there's no one that lives in this real estate at all, okay? So there's towns where no one is actually living in these apartments or buildings or whatever it might be, these houses. So I think, honestly, Evergrande, the fact that they missed that 83.5 coupon payment last Thursday, the markets call that technical default, okay? Technically, they have defaulted because they missed that coupon payment, and they have 30 days to pay that coupon payment. But I do believe this crowd will default. They are the second largest property developer in China. They have something like well over 700 projects, and they're in about 200 different towns in China. So keep an eye out for that, because that's not great for risk markets. It actually percolates into other risk markets, high yield markets, credit markets, corporate debt markets, and that sort of thing. Also, it affects people's sentiment on the bearish side. So if you notice, the crypto fear index at the moment is at 27, which is fearful. When it's bullish, it's around 78, okay? So keep an eye out for that. Also, the Fed, I want to comment very much so on inflation. The Fed thinks that inflation is around 2% or 2.2% year on year. I got to tell you, the Fed they're absolutely on drugs, and the economists, I have to tell you that seriously. When you look at the stats, they are alarming. If we look at the food price index since 2001 to 2021, the food price index has more than doubled, okay, by 2.5 at least, right? You've got food price inflation running at something like over 100% per annum, okay? If we look at Brent crude year on year, yearly, it's up 86%. If we look at crude oil, it's up 83%. If we look at natural gas, it's up 30%. If we look at gasoline, it's up 83%. If we look at aluminium, 71%. If we look at corn, food, 45%. Oats are up over 102%. Rice is up 11%. Soybeans, 79%. Wheat, 32% up. Coffee, up 75%. Lumber's up over 100%. Sugar's up over 43%. And this is basic stuff that we need to survive, right? Food, right? Oil, gas, this sort of thing for heating. Crude oil, petrol to put in your car, right? And apparently there's a fuel crisis in the US at the moment. There's policemen and that sort of thing, and some of the army out at petrol stations because there is a fuel crisis, right, in the US. And honestly, this is, how do they come up with a 2% inflation rate? Not to mention utilities, at the cost of electricity, the cost of water, the cost of sending your children to school, just the costs of everything, the costs of fines, the cost, tax is going up. The US is effectively broke. Now, about 5 years ago, China came out with a credit rating for the US for their bonds, for their commercial paper and their government bonds. And China basically said they believed their credit rating was CCC. And I believe that too, because the US has a balance sheet which is literally broke, okay? And they keep issuing and issuing debt. And there is nothing behind that debt, okay? Now, in the olden days, a currency, for example, would be backed by gold. Just like the pound was backed by gold. The US dollar is not backed by anything. So essentially, the more they issue bonds into this market is akin to selling US dollars, right? This country is broke, and it's very, very serious. If you look at the export figures to the US, they are barely exporting, right? Out to earn receipts. To pay off their budget and their deficits. If you look at the import prices, they're basically buying stuff in. The US is living way beyond its means, okay? And that's very scary. Coupled with that, not only that, we have a stock market in the US that is at all-time highs, okay? Now, seasonally, the stock market in the US seasonally is very, very volatile in October. There have been stock market crashes in October, and this is seasonally over a number of, period of time, over 200 years, right? It makes me laugh when people talk about seasonality, particularly in the crypto market. You need at least 200 years of data to talk about seasonality in crypto markets. The time frame is too short to be looking at seasonality, people. And anyone that tells you that on YouTube or whatever has not got a clue. The Dutch equity market was set up in 1635, right? We have 400 years or more of data, right? And that's how you work out seasonality, not when you've had, Bitcoin coming in at 2008, and it didn't actually get traction until about 2011 or 12. It's just too short for seasonality, okay? And as I said, anyone that tells you that you can garner seasonality information from a short amount of data is just off their brain. Seriously, they're just stupid. Now, also, Chairman Jeremy Powell speaks to Congress on Tuesday. He has to testify. That's going to be very interesting because this deal, as I can say, a deal is like an Australian word for, has no idea, is going to testify and say that inflation's running at 2% and they expect unemployment to get to, 3.5%. But if you look at the stats on the US, literally there's 330 million people in the US, and only about 153 million that are employed, right? And within those figures, there's part-time as well as full-time. So I'm basically saying to you people, where is the rest of the 150 million odd? Where are they? The US keeps saying unemployment's around 5.6% or whatever it must be, but it doesn't register. It doesn't make sense. The stats tell a different story when you look at other stats, right? They tell a completely different story. Now, let's get back to the US equity market, because from what I see, it doesn't look very good, okay? Volatility is rising. Interest rates are rising dramatically. The technical indicators are signaling distribution, right? And this is a term professional market players use. And it's a term referring to what the smart money is doing, the professionals, right? The professionals are getting out, and the dumb money is creating the tops, right? So the dumb money is still buying at the top, and the professionals are getting out. Now, we can see this because a lot of stocks within the industries are trading under the 200-day moving average on a one day, okay? People, there's only a small amount of people that are participating. And if you look at the advanced decline ratios on the US, they're even more, even more dramatic, okay? The fact is the advanced decline ratios, the breadth measure of the market is deteriorating quite quickly, which means that there's more declines than advances, okay? Now, there is a rule of thumb that when the number of stocks, fall below the 200-day moving average, right, and they fall below 80% to 60, they're going to go to 30. And currently they're at 59%, okay? And that generally happens in equity markets, right? Because more stocks are going down than up, and it's only being kept up by the big stocks in the index, for example, in the Dow or in the tech index or in the S&P, right? And this is not a great story. Also, if you look at the S&P, it's below the 50-day moving average, and it's not, getting back above that, okay? It's telling us something is going on in this market. The uptrend has been broken, that's for sure. Now, on the S&P, the 200-day moving average support line is 4120. And I do believe we will get there very, very quickly. There is negative divergence, right? And it's not a market that I'd want to be sitting in, that's for sure. Now, ECB President Lagarde spoke today, and again, she's singing the same hymn sheet as the US Fed. Inflation's low, unemployment's good, all this garbology, absolute garbology, and they just haven't got a clue, people, seriously. Just haven't got a clue. US durable goods came out, and that was up 1.8%, right? Which means they're buying more in terms of durable goods. They're expecting minus 0.1%. And, something just does not look right in Toot Garook. Fed income, it doesn't. And the Fed and the people in the Senate and the Congress haven't got a clue. I have to tell you that, seriously. So also there was a German election, and the SPD coalition got in. Merkel, as you know, is retired. It was a very narrow win, so it is going to have to be a coalition. It could be with the Greens. Also, there's an energy crisis in China. People were told in China, stop using electricity or air conditioning because it's hot over there, and factories were told to stop using electricity, right? Also, there was talk of a British warship through Taiwan in Taiwanese waters, and the Chinese have warned them. With this Evergrande fiasco, the Chinese injected another 100 billion into the financial market. So there's all these risk events going on, never alone talking specifically about crypto. And when you look at all the indicators for crypto, it looks very bearish for me, okay? I will come back to the fiat markets and talk about commodities, interest rates, foreign exchange as well, and credit spreads and what's happening with that. And also, just what's happening with the average true ranges of these markets as well. So let's go to cryptocurrency, guys. Now, if we look at live CoinWatch, market cap today is 1.98 trill. Volume is lower at 69 bill. Liquidity is lower at 4.829 bill. And when liquidity is actually lower, people are selling up, getting out of crypto, going into cash, and moving their cash off the exchanges. And that's why liquidity is low. Okay, and that's why I look at these figures. Now, Bitcoin dominance is 41.37% in a very narrow range. But as this market sells off, that dominance will go higher. And I'm expecting Ethereum to really seriously underperform. A lot of the traders are very long Ethereum and the fund managers, and I believe they are just wrong. And I will be vindicated, just wait, because I just don't believe it's sustainable here at Ethereum at 3073 as we speak. If I go to Mazari, and according to Mazari, let's look at the 24-hour volume. Tether is up there at 18.30 bill. And don't forget, there's a rumor about Tether. They may invest in Evergrande's commercial paper. They do deny it, but where there's smoke, there is fire. Ethereum 4.73 bill, Bitcoin 4.43 bill, Binance US 3.95 bill, Solana 1.77 bill, all fairly large. And then we go down to XRP at 549 mil. Now the market is not really performing. There are specific coins that are, but overall, I still don't like this crypto market at all. If we look at a 24-hour clock for Bitcoin, the open was 43096, the high was 44316, the low was 42769, and the close on a 24-hour was 43792, and it's under that at 43525. Now, we do find resistance on Bitcoin for a 4-hour is 44116. The sellers, the traders are selling above that 44,000 level, and support is at 42539. Now, Bitcoin is still trading under the 200-day moving average on a 4-hour, and that makes me very, very nervous. Liquidations on a 24-hour basis were 88.6 million. Most of that was Bitcoin and Ethereum. If we look at just some of the news today, obviously the Chinese thing, they've made it illegal for anyone to trade cryptocurrency, as you know. Huobi and OKX have been sold lately because of this. They've had to cut back all their Chinese trading. Huobi has to close all the accounts for Chinese by the end of the year, and so does OKB, okay? El Salvador says that 2.1 million people are now using their Chivo crypto account wallet, and that's out of 6.5 million people, the population of El Salvador. If you look at the news today, everything's about Cardano today. Great fundamental news on Cardano, but lo and behold, when we look at Cardano, it's basically doing nothing. It's off 3.46%. Now that gives you information, right? Great fundamental news on Cardano, and yet the price is going down, right? Again, that is information to us. If we look at other news in crypto land, Alchemx has integrated with Chainlink to make DeFi loans a set and forget, and they're using Chainlink's price oracle. We also see that Cardano is collaborating with Chainlink, and they're also integrating Chainlink's real-time price oracle as well, which is great for Chainlink. Chainlink are getting so many clients, and it's more than 2 a day, okay? Binance NFTs, KHL cards have gone on to Binance's NFT platform and their Continental Hockey League. Crypto.com, they have a tax package which is free for clients, and it's available in Canada, US and Australia, and now they've made it available for the UK. So have a look at that, people. Tron also had a new client, APNFT Foundation, and they've set up their NFTs on Tron, which is great for Tron. They want to increase Tron Cool Cats. Apparently it's a $100 million fund. They've got dedicated to high quality NFTs, and APNFT is going on there. And apparently APNFT owns art pieces like Beeple and Pack worth over $30 million. So let's talk about Cardano. There's a lot going on with Cardano today. Apparently there's going to be a new stable coin issued on Cardano called DJED from Coty. Also, as I said, Cardano is in a strategic collaboration now with Chain Labs. And Revuto blockchain subscription-based network has expanded on Cardano as well, with a $2 million private fund for developers. Also, Cardano's investment arm, Imuga, announced a $100 million investment in the DeFi ecosystem and NFT solution for Cardano. Cardano is also partnering with American Telecom Service and their Dish network. So there's a lot of information out there about Cardano today, but the price is still going down, okay? So the market actually sees Cardano as being expensive, and I do at the moment. Now, Celsius, the lender, apparently Kentucky says that their interest-bearing account violates Kentucky's security law and fails to disclose to customers what occurs with the deposits and whether customers are protected under the State Security Protection Act. Now, this is interesting because if you stake with these companies like Celo or Nexo, you can lose control of your coins, okay? Because effectively you don't have them in your own wallet. You don't have control of your own coins and tokens, right? So if you stake, you could be up for a staking period, and then, you know, it's difficult to get your coins back or your tokens if you want to sell, okay? So always remember that. Plus, if you're staking your coins, you're giving up your ownership, okay? And that's very important, right? You're effectively giving someone else your money, your crypto, they're holding it, and they literally have the ownership of it. And you should always look at where you're staking your coin. What is it? You know, how big is the operation, for example? Who runs it? You know, is it a fish and chip shop? You know, it's so small that it could go broke. Don't forget, all the metrics I'm looking at look like we're coming into a funding credit crisis, just like 2007, and I don't like it. And when we come into a funding credit crisis, banks stop their limits to small companies, right? Their overdraft limits to those small companies. And any small company could fall down. Now, in 2008, a large regional bank in Australia, Suncorp Metway, nearly went broke. And if Suncorp Metway can go broke, some of these providers and lenders can easily go broke as well. And some of these DeFis like Sushi and Uniswap can easily go broke as well with funding taken away from them. And if I believe what I believe, you know, there could be a funding crunch and a massive one, okay? Because everything is moving up. Risk metrics are moving up. Interest rates are moving up. The funding part of emerging market curves are moving up as well, which I'll talk about later, okay? So, you know, please, if you're going to sell your crypto, put it in real dollars, not stupid, supposedly stable coins. Don't do it, or stable tokens, and bring it back to your bank account and make sure the bank account is with a big major bank, okay, that has plenty of assets and plenty of funding. So what else we got to say today? If we could talk about Ripple, Ripple's Brad Garlinghouse, CEO, criticised the SEC for the lack of regulatory clarity. The biggest problem is the SEC is just not listening, okay? They're an arrogant bunch of so-and-sos, and they're just not listening. Former USA Treasurer says Ripple's for payments and Bitcoin is for speculation. Rosa Rios, who joined Ripple's board in May 2021. Now, she was under the Obama government between 2009 to 2016, and as I said, she joined the board of Ripple in May 2001. Now, Gary Gensler was out there, jawboning again, the SEC chairman, and this is what he said. He said he doesn't see much long-term viability for cryptocurrencies and compared them to the wildcat banking era in the US, which occurred in 1837 to 1863 in the absence of federal bank regulation. Fair income. This guy doesn't know what he's talking about. Seriously. This guy is an academic. He taught at MIT, right? A fintech course. Big deal. The guy is an academic. He doesn't talk about the technology of cryptocurrency, i.e., for example, you know, self-identification being on blockchain, where you don't have to identify yourself everywhere you go, Whereas on blockchain, it'd be on a decentralized network, and it's basically a decentralized network. We can go anywhere in the world, and it has it on there, right? He doesn't talk about supply chain technology. He doesn't talk about the XRP, instant payment technology. He doesn't talk about technology that gets rid of accountants and real estate agents. I mean, he doesn't get rid of it. He doesn't talk about compliance technology. I mean, the guy is on drugs. These people don't know what they're talking about. And unfortunately, they are all in government, and in those areas where they make decisions for the rest of us. And that just annoys me, I have to say. So let's look at what else we got here. Let's look at the social media. World Wide Web. I'm very sorry cutting that off, but if you'd like to hear the whole podcast and get all my information on Patreon and reviews and all sorts of things, please join my Patreon. It's Crypto Granny on Patreon. You can see what's available there, and it would be very, very much appreciated. Thank you.